there, welcome back to ET Now. Very good morning. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena. A show where we'll take all your stock-specific queries with our experts. Write to us ASAP. But before that, a quick look at the markets. Ankita, it's a rather negative day coming in for the markets, yet we have managed to recover from the day's lowest point, just trading about 0.2% lower at this point.
Absolutely, Kanishka. In fact, we started on a negative footing very obviously because of the 50% tariff that has come into effect. But we have managed a solid recovery. As of now, as you can see on your screens, Nifty has recovered 144 points or a 0.5% recovery coming in on the Nifty from the day's lows. We are sitting at 24,652. We are above the 24,650 levels as of now, and it's a very smart recovery that we are seeing. Nifty Bank also following suit. We have recovered almost 350 odd points from the day's low on Nifty Bank as well, sitting with cuts of just 0.2% on Nifty Bank as well. Well, speaking of the sectors then, sectoral indices are reeling under pressure except for Nifty Media, Energy and Metal that are trading marginally in the green. Media is leading from the pack with Z Entertainment up and away 1% in trade. Besides that, we have Nifty IT that is reeling under solid pressure of a percent cut coming in on Nifty IT. Nifty Realty also trading with the cuts of 0.7%. Nifty Pharma, FMCG, Nifty Bank, all of them are trading with cuts in that pecking order. Nifty Realty also trading with cuts of 0.8% there. So all the sectoral indices are trading in the red right now. But remember, India VIX also saw a sharp jump up, hinting at the volatility in the market. But good recovery is what we are seeing as of now. Couple of names that are in focus today. We have Indigo. That is in focus on the back of that block deal coming through. We have HDFC Bank also on the back of a block deal. Textile stocks were reeling under pressure on the back of that 50% tariff, have managed to recover at least from the day's lowest point. So the textile stocks also are in focus. Shilpa Medicare on the back of a joint venture with with pharma, pharmaceutical industries and biological products. They formed a tentative nod for its ANDA tablets. So on the back of that, Biocon is also in focus. So a couple of pockets as usual. The market trend generally continues, Kanishka, of individual stock movers, but market breadth is tilted in the favor of declines.
Absolutely, market breadth is tilted in the favor of declines. Quite a few, quite a bit of a negative start that we saw today. But to discuss that further and also get your stock-specific queries answered, we're now joined by Sharmila Joshi. Hi, Sharmila. Very good morning. Well, let's get your first thoughts on this tariff impact that we are reeling under. Largely the consensus was that this 50% tariff news is largely priced in. But still, we have seen quite a bit of a cut coming in for the markets today, though we have managed to recover from the day's lowest point. Where do you see, the next leg of recovery coming for Nifty now?
Yes, so I think precisely what market seems to have analyzed is that it's a couple of sectors that are most impacted by tariffs. And, we've been hearing this word for the bandied around for the longest time. There was an extension, there was then some negotiation on, and, you heard all kinds of different noises. And now finally it's a reality. So in a sense, that's always a good thing because now market can continue from here. Taking this as the calculating the impact based on the tariffs as they know of them now. The trouble with this situation is that there is that overhanging threat that if you continue to buy oil from Russia, you would see a further escalation of tariffs. And if you do, if you keep hearing that kind of talk, how do you really respond as a country? Because that's not the best position to be in. Because obviously you wouldn't want anything to be dictated by another country. That said, I think markets have taken it in their stride, as you rightly pointed out, and hopefully things will stabilize from here. Because what we've been thinking and saying for the longest time is that a lot of blocks are in place for the economy to grow in terms of whether it is the latest development with the GST, rates getting into that two-tier structure, or with interest rate cuts, etc. But we haven't really got to that potential, really, because of all this, the news flow that has disturbed the markets the last quarter or so. So hopefully from here, the sectors which are less impacted will continue to move on the basis of their earnings rather than any outside noise. And overall, I think, given the kind of liquidity that we have, market should stabilize from this point onwards is what I think.
All right, so that's the view coming in on the markets and the levels to watch out for. Thank you for that, Sharmila. But let's get going with all the questions that you've been sending us. Keep writing in your questions. The number is flashing on your screens now. Keep sending in your stock-related queries, the buying price, your holding period, your question, and we'll get them answered by our experts. So start sending in your queries, and we'll start taking them now. The first question that is coming in now is Dhanashree, who's writing in from Hyderabad. She says she holds DV's Labs 50 shares at a buying price of 6,200 each. She wants to know if she can hold it for the next 6 months. Would it be affected by US tariffs? Sharmila, tricky one. DV's Labs, what would you see? We did see a note by Jefferies that had come out that had upgraded the stock. But what would you say for the next 6 months? Do you think, firstly, 6 months is enough for holding period for this counter? And if yes, then what would be the upside?
So precisely, I think you should be thinking of holding the stock for a longer period of time. I think 6 months is too short. That said, whether it is 6 months or a year, I think you should continue to hold. To my mind, pharma has been sort of identified as a sector by most people that will be less impacted by the tariffs, simply because it's not a very easy sector to replicate. So if you think that you are going to be able to replace something that EVs is supplying by building something in the US, it's going to take time and to get the required manpower, etc. Overall, it is felt that this will be a slightly more protected sector than some of the others. So even from that perspective, I think for not just for DVs but for all pharma companies, that is a positive. And overall, I think DVs, the kind of numbers it has given and the kind of possibility that it has, it definitely looks to be a stock that you should continue to hold in your portfolio. My only request would be to increase the holding period from 6 months to maybe 18 to 2 years, 18 to 24 month kind of a period.
So you could continue holding DV Slab for a longer period, especially as of now there are no tariffs on pharma currently, they are exempt. So yeah, a long-term view, continue to hold on DVs. The next query that we have is coming from Raguraman, who's writing from Trichy. He has a query on Dabur. He's been holding 30 shares of Dabur at a price of 517 rupees. He wants to know whether he should continue to hold or exit at this juncture. Shamila, what's you here? Especially, we have seen quite a bit of positive sentiment coming in, especially since the GST reforms were announced, and we still don't know the timeline of when they will be implemented, those cuts. But still, what's your view there in the FMCG pack? Is Dabur one of your picks as well? And what should the viewer do? 30 shares at a price of 517 rupees.
So clearly, as you said, that this GST will be a sort of a positive for anything in the consumption space, and Dabur clearly belongs to that. And so also the indication seems to be that since this was announced from the ramparts of Red Fort, this is something the government is actively working on, and it will be implemented sooner rather than later. So that again is a positive. And overall, if you ask me, Dabur, with the kind of product portfolio that they have, on the back of the fact that overall consumption is a theme that I continue to like, given the fact that we've had rate cuts and monsoons have been good, etc. One would expect the volume pickup in the rural sector to sort of boost earnings going ahead. And to my mind, this is definitely a stock, but to hold, especially if you have a 2 or 3 year sort of horizon in mind, then this becomes a definite hold for me.
All right, so that's the view on Dabur India. But with that, it's time for a quick breather, viewers. Don't go anywhere for the break. We continue to take your questions. Stay tuned.
Kanishka Sarkar and Ankita Saxena, a show where we're taking all your stock-specific queries with our experts. And we still have Sharmila with us, and we're also joined by Ajit Mishra, who's the SVP Research at Religare Broking. Hi, Ajit. Very good morning to you. Now, let's get back to all the queries. Then let me come first to you. We have a query by Pankaj, who's writing in from Haryana. He has Federal Bank shares, 2,000 shares at a price of 208 rupees. He wants to know what's the short-term view here. What do you think is going to be the target that you would like to give us, say, for a period of next 6 months?
Hi, good morning. So, see, Federal Bank, if you compare it with the other banking, names, it has also witnessed a nominal profit taking in comparison to the others. Means after retesting its record highs in the month of July, we have seen the stock has retraced to around its long-term averages and currently hovering around this 190, 195 band. So short term, it might continue to consolidate, but from the medium term means 3 to 6 month kind of a time horizon. Once, let's say, we surpass this level of 200, then probably this recovery may like come into the picture, and the stock might inch towards record highs again. So as of now, consolidation is more likely in the near future, with 180, 85 being the lower band and 200 being the immediate hurdle. So if the view is less than 3 to 6 months, one can refrain from any fresh long position. Otherwise, you can stay put.
So that's the view on Federal Bank on the technicals. But let's move on to the next question. This is coming from Krish. He says he wants to know about Welspun Corp. He's bought 50 shares at a buying price of 905 rupees. He wants to know if he can keep the stock for the longer term. Sharmila, coming to you, Welspun Corp, a longer period of time, perhaps a year or two. What would be your view?
I think it's a hold, especially since the investor has a fairly 2-year kind of an horizon. The valuations seem reasonable. The results have also been fairly okay, so I think you can continue to hold it.
Okay, so that's the view on Welspun. But moving on to the next question, this is on a shipbuilding company. This viewer, they haven't given their name, but they're holding 60 shares of Garden Reach Shipbuilders at a price of 2,640 rupees. That's their average buying price currently. So they want to know whether the stock is currently trading around those 2,400 levels. So they are sitting at a loss. They want to know whether they should book their loss or wait for a turnaround. If you advise holding on, they can hold on to it till the end of 2025. So what's the likelihood like for GRSC? Sharmila, you want to take this?
Yeah, sure. So first of all, I don't think that there needs to be any turnaround of any sorts in the stock, because if you ask me, the kind of order book that they have and the outlook going ahead seems very strong. The problem that has happened is that there was a huge fancy for defense stocks, understandably so, given the kind of geopolitical situation that there was some time back. And these stocks had sort of overshot their valuations. So the thing to remember here is that the order book is very good. Most of these orders are very long gestation period orders. So for them to reflect into the bottom line takes time. Having said all that, looking at the overall situation in the world, as well as the kind of existing order book that they have, and this sort of a feel that you're getting from the government that they are likely to increase and improve their presence in the seas, that makes the outlook for any shipbuilding company in that, in this context, extremely good. So I would really request the investor to extend the holding period beyond 2025, because that's now like really short, because that's just like almost like a quarter away. But keep a slightly longer time horizon and continue to stay invested in Garden Reach, because I do believe that their order book is very strong and it warrants a hold.
All right, warrants a hold, but the longer period, the holding period has to be longer for Garden Reach, or for that matter, any defense name. But let's move on to the next question that's coming in from Radha Krishna from Bangalore. He says he has 4,000 shares of IRIDA at a buying price of 262 rupees. He wants your advice on IRIDA and also Canara Bank that he's been holding. He's bought it at a buying price of 117. What would be your advice, Ajit, on IRIDA and Canara Bank, say, for the next 1 year?
See, the challenging part is that you bought it, at very high levels. IRIDA at 260 is currently quoting at 144. The downside seems capped now after this sharp correction from the record highs. But the recovery is also going to be very gradual. There's no sign of reversal yet. So maybe we might see some formation consolidation, in the coming weeks, and then probably we can see a rebound attempt. First hurdle could be close to around 160, and then 170 will be the major resistance for the stock. So for let's say a longer time horizon, now 130 is a strong base, so that should be stop loss. And until we decisively break above 170 mark, one should refrain from any fresh positions in case if somebody is planning. Ken Bank, on the other hand, we are seeing that the PSU pack, after attempt of recovery, again we are seeing majority of the stocks are fizzling out, and Can Bank is also struggling around its medium-term moving average. So a break below 104 might result in further decline towards, let's say, 100 to 95 zone. So he should maintain a strict stop at 100 in case if he's planning for a short to medium term. In case of recovery also, I doubt that we can see any meaningful move until we break 118. So broadly, this range 100 to 120 is something that stock might continue to hover in next 2 3 months.
All right, so that's the view on IREDA and Canara Bank. But moving on, we'll just be back to all the stock-specific action in just a bit. But we now have Ravinder joining us to find out why paint stocks are surging in trade today. Ravinder, over to you.
All right, we'll get back to Ravinder, but with that, it's time for us to slip into a short break for now. We'll come back and get all your stocks questions answered as well. Answer. And before we resume with all the stock queries, let's go across to my colleague Ravinder, who's standing by with the details of why the paint stocks are in focus. They're surging away in trade. Asian Paints is trading with gains of 1.5%. Berger Paints is also doing well. Now remember, Nuvama had also come out with a buy rating on these counters a day ago. But why are these paint stocks in focus today? Let's take it to my colleague Ravinder, who's standing by with the details. Take it away, Ravinder.
Well, as paint companies is in focus in today's trading session, and the key reason behind that is Nuvama has come out with the note post their paint and adhesive conference, where they have highlighted the gradual improvement in demand to continue for the paint companies, but they have highlighted that the some paint companies demand has been deferred due to heavy rains in Q2 FY26, and they also highlighted that the volume growth for paint companies to accelerate into Astro FY26 as new competition shall be in base, and the Nuvama say that the market leaders is focusing on the high market share. They also highlighted that the input costs are soft and expected to remain stable for going forward for paints and adhesive leaders, and companies continue to fuel growth through innovation via brands, distinctiveness, premiumization, and pioneering categories. If we talk about their Q1 FY26 con highlight, where management has highlighted that if we talk about Asian Paint, then Asian Paint management has said that some positive sign emerged in the urban areas after previous weakness, and Berger Paint has highlighted that noted that the company noted that while progressing monsoon and easing inflation may support rural sentiment, while there are signs of early momentum in the urban markets. Kansai Nerolac has said that the July demands remain muted like June 2025. However, August and September are anticipated to be better as compared to earlier, and demand in auto segment was muted, where Kansai did better than the market, led by various incentives in distribution and innovation. If we talk about valuation of the paint companies, then 12-month forward PE, Asian Paint is trading at 53 times, Berger Paint 46, and Kansai Nerolac is trading at 26 times. If we talk about price movement of the paint companies in last 1 month, 3 month, and 6 month, Asian Paint has given a return of 7%, and if we talk about in 1 month, and if we talk about for 3 months, then Asian Paint has given a return of 8%, and for 6 months, Asian Paint is up approx 16%. If we talk about Berger Paint, then Berger Paint was down by 6% in the 1 month, and for 3 months Asian Paint is down 4%. And if we talk about Kansai Nerolac, then Kansai Nerolac is up more than 7.5% in 3 months and 6% and more than 3% in 6 months. So overall, on the all of these positive notes, paint companies is in focus, and generally Q2 remains a good quarter for the paint companies due to festive seasons.
Thank you, Ravinder, for those details, and that's about the paint sector. But moving on, let's shift focus to the telecom sector. Then we have a query coming on Indus Towers. The viewer Srinivasa Rao is writing from Hyderabad. He has 500 shares of Indus Towers at a price of 410 rupees. He wants to know whether he should continue to hold or sell or average out at this level. Of course, he's sitting with a bit of a loss at this point. The stock is trading at that 340 level as we speak. And in just the past past month, it has seen a decline of nearly 11.5%. Ajit, let me come to you. What do you see on the charts for Indus Towers? Of course, we have had the news flow coming in, with respect to Vodafone Idea and Indus Tower. But then on the charts, how is it looking? Do you think there's going to be some upside from here on?
So at least some stability is there. Means we are again approaching the previous swing lows area around 330 zone from where last time the stock witnessed a rebound. So probably around that area, we might again see a breather, followed by a potential attempt of recovery also. But upside is going to be capped because 355, 365 means every 15, 20 points uptick, the stock is going to face resistance. So in the near future, it's likely to consolidate in this range. So if the view is short term, I would recommend utilizing any opportunity in this range of 365, 370 zone to exit your longs and take the losses.
So exit call coming in and perhaps take the losses on Indus Towers. But let's move on to the next question. This is Venkat Ramani who's writing in from Bangalore. He says he has HAL. He wants to buy HAL. Is it a good time to get into HAL? The holding period is 15 months. Ajit, let me come to you for this one. For the entry price for HAL, firstly, 15 months period for an HAL, is that enough? And what is the right entry level firstly? And tell us the time frame, the right time frame perhaps that could see an upside for HAL.
Right. So, in fact, Ankita, we were seeing that from the record highs, majority of these stocks, they have corrected roughly in the range of 15 to 25% on the lower side. And HAL is among the top performing names. BEL and HAL, they are among the top performing names throughout this uptick or down phase as well. So now we are seeing stability around the long-term averages in HAL after this dip from 5200 to 4400 zone. So I feel it's a good time to start accumulating in a staggered manner. One should not, jump into a trade. At least 50% can be bought at current area, and then in case if we see any further dip towards, let's say 42, 4,000 though, then he can add more. For any momentum, we need a close above 4600 mark. Then we can see next leg of up move, which could help the stock to inch towards previous swing high, that is 5200 mark, and then maybe a new record highs as well. So accumulation is the key, means you can buy 50% current levels and wait for further dips to add more.
Accumulation is the key for HAL, but moving on to the next counter. Sharmila, let me come to you for this one. Rabinder, my colleague, was just talking about the paint sector. So what's your view there? We have a viewer, Sundaraman, who's writing in from Mumbai. He wants to know whether he should sell Asian Paints at this level. He's been holding the stock for the past 5 years.
Yes, so I think, for long-term investors, Asian Paints has seen a lot of pain. It was the preferred stock of, it really had the whole market on the positive side. And then with the advent of all the competition that has come, as well as their own numbers not doing that well, we've seen a sharp sort of PE erosion in the stock, followed by, the kind of price cut that we've seen. But overall, if you ask me from a paint sector point of view, I would be positive. Also, I think now that the correction has taken place, probably the worst is now in the price as far as Asian Paints is concerned. So I don't think it's going to go back to the kind of valuations market gave it earlier. But having said that, you would get higher levels from where you are currently. So if he has the patience, I would request him to keep holding the stock, because I think at this price, a lot of the negative news is now priced in, because we've seen the competition come in, we've seen it stabilize, we've seen what it does to Asian Paints market share. Also, I think, paints as a sector is an expanding sector, so everybody will sort of find their place. So I think it's a good idea to continue to hold.
All right, hold call coming in Asian Paints, and like Rabinder just came in, gave a lowdown of what the Nuvama note says. It's a buy call on the paints like Asian Paints, Berger Paints, and of course all the negatives has already been priced into Asian Paints especially. So a hold call coming in there, but let's move on to the next query that's coming in from Chandrasekharan, who's writing in from Chennai. He says he has MTAR Tech, 50 shares at an average buying price of 2,640 rupees. He wants to know if he can average in at current levels or wait for further correction, or he wants to hold it for the next 1 year. Ajit, MTAR Tech, for the next 1 year, is it a good bet? Can he average in? What should he be doing with this counter?
See, there is no sign of reversal yet, though the stock made an attempt of recovery of late, but it couldn't sustain above the key hurdle of multiple moving averages placed around the 1750, 1800 mark. And again, we are seeing that stock is gradually drifting lower. Uh, though the price action is not in sync with the volumes, means we are seeing marginal dip in the volumes also during the decline. So it seems like consolidation is more likely. So for adding more, he should wait for a close above 1700 mark. Then he'll have a confirmation that yes, the trend has reversed. And since he has bought it at very high levels, then it would make sense that at least his waiting time would reduce. On downside, if let's say if we close below 1400 mark, then probably 1200 is also something that it might retest. So as of now, you can stay put, but avoid any adding to your existing longs.
On MTA Tech. But on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side. So we were taking all your stock-specific queries. So let's get back to all the queries then. Now this one is coming on TCS. This viewer, Murli M, is writing from Bangalore. He's bought 100 shares of TCS at a price of 3,045 rupees. He wants to know the outlook for this stock for the next 3 to 6 months and also about Shriram Finance, which he has 100 shares. He hasn't mentioned the buying price for Shriram Finance, but he's looking at a timeline of 6 months. So TCS and Shriram Finance, Ajit, what's the outlook there?
Yes, we are seeing a bit of a rebound or recovery in some of these heavyweights like TCS, Infosys, HCL Tech. In fact, TCS from the last swing lows close to around 3,000 levels, so we have seen a decent rebound. But as we all know that the uncertainty is still around, when it comes to the US economy outlook, and we are largely focusing on that for clues. So after this rebound, sustainability is the key. Means we should cross 3,200 mark, and then probably we can see, let's say, 3,400, 3,500 in next 3 to 6 months. So as of now, my recommendation would be to stay put with 3,000 being the closing stop loss, and 3,400 and 3,500 as a positional target in next 2 to 3 months. Shriram Finance, on the other hand, looks weak to me. Means it was among the top performing names within the NBFC basket, but of late, we are seeing the stock has been gradually inching lower after the failed attempt to break out around the record highs area. And probably 530, 35 is something that we might test in the near future. So roughly around 5 to 7% decline is something that the stock might experience in next 1 week or so. So it's good, to exit at current levels and wait for any kind of consolidation or sign of recovery to re-enter again.
All right, that was the last stock query for the day. Ajit and Sharmila, thank you so much for taking the time out and joining us and answering all our stock-specific questions. We'll let you go on that note. But let's go across at Mumbai's iconic Girgaon Charaja, the world's biggest modak, weighing a whopping 800 kilos, that was unveiled. The modak was prepared using the traditional ingredients of besan, ghee, sugar and elaichi. My colleague Nilesh Shukla spoke to the organizers behind the making of the largest modak in Girgaon Charaja. Let's listen into the excerpt of this conversation.
This laddu weighs nearly of 851 kg. So that is a massive number when it comes to the weight of this laddu. Now, there goes many specification into this laddu, and which is why we are being joined with the experts, a member of the Pandal who have been devotedly working behind this achievement of getting the Mumbai its biggest laddu. Sir, what exactly is your motive on building up this laddu, and what exactly goes through your mind when you claim it to be Mumbai's biggest laddu?
Actually, we wanted to make it big with the traditional ingredients, the mainly purpose. We used besan, we used elaichi, we used ghee, we used sugar. The main challenge that we faced was the structure, the size of the modak, how it's going to look like. So we spent months and months about the designs and all that things. And finally, it is here. We have achieved after Bapa's blessings. So we are very happy here.
Conceptualization is one thing, and building it is another difficult challenge. So how many hours, working hours or days, or we can say months, did your team take into constructing this biggest laddu?
It took so many months, many meetings, planning. Many engineers came about the structure thing. We drew the diagrams, we deleted. After so many hours, we got the support of the mandal as well. We got the support of the Mithai Wala, Mithai Wala was included. And after Bappa's blessings, we finally able to achieve one particular structure that we believe that yes, this is gonna be the Modak structure.
All right, Kanishka, I believe you also had the chance of visiting a few pandals. How was your experience, and did you eat any modaks?
Absolutely. In fact, it is my first time in Mumbai, and I'm glad I got to enjoy the festival and the modaks as well. But looking forward for a more wholesome experience over this next 10-day period.
Absolutely. Wishing all the viewers a very happy Ganesh Chaturthi. We'll be celebrating it over the next few days. But with that, it's a wrap on this edition of bnsn. Now, we'll take your leave. Thank you so much for tuning in.